So identifying questions. I want to focus specifically on accounting and finance questions because these are things that impact you and your job. Most of the questions or accounting domain that takes advantage of data analytics is in management accounting and in auditing. Okay, so these are the primary areas. Finance and tax, we're doing some stuff there, but it's not terribly exciting or interesting, at least at this point. Okay, financial statements. We may look at things like, questions. How profitable are we? Can we pay our debts? Do we have enough working capital? To cover our short-term obligations, to make sure that we don't have to take out loans from the bank, that we have cash flows that are sufficient. Okay, so we're looking at this from what is the risk of the company in terms of an investor going in and investing in my business. There are some other things that we can look at in financial reporting. We can look at what is driving abnormal returns. The companies that have stock prices that are increasing more significantly than others, like what is the underlying thing that's going on? This is like PhD research here. Say, there are X number of women on the board of directors, or their investment in information technology. Try and find these patterns between those. But we could look at this. Analysts, market analysts will go through and they'll try and find lots of data about a company in order to invest before everybody else figures out that there's something going on. Okay. On the management side, we're looking at performance. So how do we improve, increase contribution margin? How do we control costs? Which departments use the most energy so that we can reduce the energy costs for those? Okay, where are we spending our money? How close are we to the budget? And so we take these questions and then we do, variance analysis, and we do analysis of different areas and so forth. On the audit side, okay, audit is focused on risk. So what are the riskiest? What are the riskiest transactions? Or customers? Or vendors? Or employees? With auditing, we use a lot of analytics because we're looking for fraud and deviation from internal controls and evidence that the process isn't working, or more specifically, that the process is working so that we can issue an unqualified opinion on the financial statements. And then tax comes down to strategy. So what is the impact of a new tax legislation? When the tax cut came in 2008 or 2009, companies were scrambling to try and figure out what that meant for them. What can they deduct now under the new law that they couldn't? What can they get credits for? How does that impact the amount of money that they pay? Okay, where should we locate our headquarters so that we can minimize the amount of tax that we pay? Basically, how do we minimize our tax liability? Okay, so these are the questions that drive all right, now we have a need for the data. Let's go out and collect the data and see what it says.